Hi, Tamal. Welcome to the Banking Show. The earnings season is over, except for one bank's results that have to come. Every bank, we are seeing that the low-cost CASA, or the current account savings account number, is down. How serious is this concern?
Ruchika, rightly, your observation is correct that almost every bank CASA has been down if you see over a period. So this is the fallout of the deposit rate war. As you know, the banking sector's credit has been growing, but deposits, there are two ways of looking at it. One is this, the saving community is finding other ways to park money and get better return. Like, for instance, as we speak, the mutual fund AUM, even though debt is not a large part of it, probably 18% odd, but AUM is now 48 trillion plus as we speak, in around 48 trillion in September. And bank deposit is close to 196 trillion. So mutual people are investing in money in mutual fund. So this is equal to State Bank of India's deposit base. What is the AUM of the mutual fund industry? And they have been growing rapidly. And as a result, that's one part of it. Second part of is this: the savers, the saving community, those savers which traditionally keep more money in the savings bank account, now they're shifting it to FDs, fixed to earn more because of the higher interest rate cycle that you are going through. So some of the banks have raised their savings bank account, which is freed now to 7.25, even 7.5%. Which is something unprecedented. We've never seen that. So there is a war on the deposit for deposits on the banking turf. But the bankers, if you say, they said, look, if you pay a little more, it will not attract deposits. The better way of looking at it is just to offer you all bundling, all kind of products to you and better customer care. So as an offshoot of that, probably for the first time, customer is taking the center stage, and bankers are concerned about customer.
Other thing that the RBI has been raising with banks is the increasing retail loan portfolio. Last year also they had raised these issues. How serious is this issue according to you?
Well, if you see some of the banks have changed their business model and they're going into largely into retail, and a few banks have not changed, but they are always into retail. That's the kind of thing. Now within retail also there are different kind of things. There are different kind, the secured and unsecured loan. Now my understanding is this: even though the bankers would not admit openly, but there are some cracks or slippages being shown in the retail portfolio. They're probably not getting into the NPA category as of now, but because of high interest rates and people's, everybody, those who have got into the, say, suppose a mortgage home loan at a separate rate 3 years back, which was pretty low, and now they have gone up. So they are finding it difficult to service the loan, and if at all they are servicing only the interest part, not the principal amount. So as a result, that's only one instance. So my understanding is this: there are some slippages, and which technically called SMA1, SMA2, like the people are not being able to pay up to beyond 30 days, it becomes special mention account 1, and beyond 60 days, special mention account 2, and only if it goes beyond 90 days, then it becomes formally NPA.
The other big headline that we saw this week came from the Chief Economic Advisor, V. Anantha Nageshwaran, who talked about how there is no pressure on RBI to hike rates, even if Fed increases rates by 25 basis points or even twice that. So where is this resilience, if I may say, of India coming from?
Well, that's the stand India has taken, and both the government and Reserve Bank of India governor. They're not using the word decoupled as such, but which is meant is this: we will not be affected by what's happening in US. If you remember, traditionally, US Federal Reserve is the driver of interest rates. In the past, Governor Raghuram Rajan spoke about that openly. And now we are not referring to this, but we are talking about that our macroeconomic stability is pretty robust. Our financial system is systemic stability is also pretty robust, and we can manage our things on our own because we have substantial amount of foreign exchange reserves. And if you see the interest rate cycle, also US has been much sharper than in India, and not only the policy rate, even how the the other rates like rate for mortgage rate has reacted, or say government bond has reacted. It's a very sharp movement. India has tackled the COVID pandemic and the aftermath in a different way. Our interest rate did not go up that much sharply, so we are exuding confidence that we don't need to be dictated by US Federal Reserve's policy decisions. It is our macroeconomic realities which will, on basis that, will take the call.
Well, certainly the times have changed, and it is correct that even RBI governor has said that our domestic policies are driving our monetary policies. Our domestic reality is driving our monetary policy. Of course, we will watch for Fed rate hikes and also keep an eye on the oil prices, which could play a dampener as far as interest rate goes. Thank you so much, Tamal, for joining us today and sharing your insights.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.